Checkity check, check, check. All right. Looks like mics are good. Go. Okay. Good evening, everybody. I hope everyone's had a phenomenal day, weekend. Hopefully it was restful. Hope you had a great time. And yeah, I mean, it's a good weekend. Excellent day to get prepped for the week. This week is a particularly short week with Thanksgiving coming up on United States Thursday, November 23rd. So with that being a bank holiday, I think things are gonna be a little bit chill this week. So but nevertheless, let's do our due diligence and get ready for the week anyways. So let's hop over to the charts and see what we can find for this week. So first things first, we always look at the economic calendar. We've got FOMC minutes on Tuesday, which can lead to some volatility. Revised U of M, actually unemployment claims at 8:30 a.m. on Wednesday, which will cause volatility. And then Thursday, a bank holiday. Friday, flash manufacturing PMI. There's going to be a lot of people that are taking the day off. Typically, those days will be far less volume. So if you're trading those days, be looking for consolidation. You're not going to get insane moves typically, but we'll see. So nothing major on Monday though. So we're going to take a look and look through the higher time frames to see what has happened this week. Okay, so let's head over to the charts now. Okay, so let's look at the quarterly, the highest time frame we have at the moment. And we kind of see, I was doing some charting before and I was looking at the bodies of the candles here and wanted to point something out here. So we can kind of see that the bodies of these have kind of come down, and all these thick red lines here, those are my 3-month markers. So try to key your eyes in on this. I know this is kind of ridiculous up here. I promise it'll get a lot easier once we go down to lower time frames, and they'll be interestingly useful in the lower time frames. So one thing that I noted is that on so I drew a fib from the low of the bodies here to the high of the bodies here. You can see the 0%, 100%. The 50% mark actually lies, if I can get this, it lies right here. And that's the 14,070 marker. And so that is kind of key because I need this to also be something of interest here. I can kind of say 14,070, 3-month, 50% bodies only equilibrium. I want to have that there because I want to see later on, you can kind of see this is that 50% mark. We can see that this monthly candle never reached down there. So we still haven't gone back down to equilibrium yet we are rallying like insane amounts, right? I don't think that this rally is sustainable, but you don't want to be trading against the trend, right? So that is something that I found that was interesting on the 3-month time frame. Now what I'm going to do is I'm going to make this transpose across all charts so that it shows up across everything for the time being. So just so that we have that there. And let's go down to a monthly chart. So as you can see, that same Fibonacci is there. So on the monthly, we can see that we've run up quite a bit. The monthly's body candles look a little bit different, right? We see them closing below. We see them closing at different levels than we do on the 3-month. But on the higher time frame that you have, the easier the better or higher probability your trades will become, because institutions, they trade on that time scale. So even on the monthly, I'm okay with leaving this here. I'm okay with saying, hey, even on the monthly, I'm okay with saying, hey, I see that this was a 3-month 50% bodies only equilibrium here, and I'm perfectly okay with it. I see price came all the way down to here and then rejected upwards, right? So from a monthly perspective, I can treat that as an equilibrium that we potentially, I mean, if we never come back to it, great, no big deal. We certainly chunked into this. So the thin red lines that you see here, those are monthly levels on my chart. And those are key areas of liquidity that allow me to say, hey, where could we possibly see some movement? So one thing I want to draw your attention to here is this here. This should have been a 1-month BISI, and this should have been marked as a dash. So this here was the 1-month buy side imbalance, this here, sell side inefficiency equilibrium point, that midpoint, right? We can see price went straight down there and ended up immediately rebalancing up to the top side. So it took out the equilibrium point here and then headed upwards. So that is very interesting to me because it respected that consequent encroachment there. So and we can see we've had a rally. Now that was the month of October, so we see we've had an insane rally in November. And so right now where we're at, if we can zoom in a bit on this high here, so we can see that we haven't quite or rather this close here, 16052.50, our high is 16049. And so I am thinking that potentially we could treat this here as a potential rejection block here on the monthly levels. So we'll see if it reaches above there or not, again, once more. But for the time being, I could see that as a rejection level. Otherwise, of course, as you all know, there is a 3-month premium rejection block up here that hasn't been touched yet. So that is some obvious liquidity to the upside that I could see us taking as a turtle soup and then heading back down to take out this liquidity to head back down to take out this equilibrium here. I don't know if we'll get that shift, but every 3 or 4 months, generally, we're looking to get some kind of a shift here. It doesn't always happen, but it's just generally seems to be what's occurring here. Sometimes you get prolonged movement, kind of like you see here. 1, 2, 3, 4, 5, 6, so shift, 6, 7, 8, 9, back up. But it's not tried and true entirely. So take that one with a grain of salt, but I think that we can certainly be aiming. We've gone up quite a bit already. You know, we've gone up into this fair value or this bearish order block. So what we need to do is we need to see if we close the month of November above the midpoint of this bearish order block. If we do, then that leads us to a case where we can treat this as a higher. So this is a short-term low here. We have a higher high, and we can treat this kind of as a higher low until we reach the next point of liquidity, which would be this 3-month imbalance up here, or all-time highs from 2022 onwards. So we'll see if that occurs, but for the time being, you know, we have not taken out the monthly levels. We kind of reached up there a little bit, so I expect a little pullback in the beginning of the week here, and then let's see if we continue to expand upwards to hit this 3-month rejection block here. So let's go down to the weekly though. Okay, so the weekly kind of looks like this. You can still see the 3-month discount BISI low. And then there's a 3-month discount BISI high. See another 3-month BISI low. Or yeah, here. And another one down here. 3-month BISI discount BISI high. 3-month discount BISI low. So you can kind of see we peaked into there a bit. And then we went back upwards. Higher high, higher low. Higher high, higher low. Higher high, higher low. Higher high, lower low. So market structure shift. Lower high, lower low. Lower high, lower low. It's kind of like a 3 drives pattern. 1, 2, 3. And that took us into, and I know it's really hard to see here, so bear with me. So 1, 2, 3 into a 3-month buy side imbalance area, and then we rejected back upwards. So as we enter November and December, we know that seasonality comes into play where we may expect things to be a little bullish in November and December, unless there's something catastrophic which happens. And there is some truth to this Santa Claus rally that occurs towards the end of the year. So if that were to occur, we know our upside targets are going to be up here, right? This premium rejection block here, and 3-month premium short-term high as well. Taking that out, and then potentially this rejection block up here, followed by, really that's about it. I mean, there's this premium sell side imbalance high that we've traded to one time before, but because we've traded it one time before, I would kind of look to treat 16257.5 as a rejection block. Although we do have a 3-month rejection block sitting right above there, not right above, but maybe like 300 points above. And on the weekly, which we're on right now, there's even a fair value gap here. So this is a weekly bearish order block. The midpoint here sits with a fair value gap on the weekly. So we could certainly head up there. I mean, we could certainly head up there. We don't know if it will get all the way up there, but I could certainly see that heading up there, a high. And then what would that create? That would create a high, a low, a higher high. We would take out a premium level on the monthly. And that is something that I'm really looking for, is this premium level on the 3-month. It's huge, right? We can see how price react at previous 3-month value, 3-month levels. Look at the discount, 3-month discount BISI low down here, right? We see that this was a discount BISI high, discount BISI low on the 3-month time frame. Look at what price did there. You know, it pretty much just saved there, and we see large institutions start to come in. And so what does that mean? That meant we had our market structure shift. We see this go upwards. We want to see a high, a low, a higher high into a premium breaker. And this is where I would start to see I would look for some big shorts here if we are going to do that. The problem is that we've seen in December, November, October, November, December 2021, we saw a rally, right? Well, in December, November, December, actually, that's not a good example. That actually dropped. Let me see if there's 2022, September, October, November, a little bit up, and then December kind of dropped as well. So let's see if back here in 2020, September, October, November, so we see some upward movement in December. January peaked a little bit. February we dropped, and then we continued higher until January of 2022. So there's certainly still movement to be made. Certainly movements to be made on the weekly. Where we are standing right now, we've created many weekly fair value gaps. All those yellow lines, we've created those And just pay attention to the color for now. You can find these yellow lines for yourself later on. But we need to add a couple now that we've had a few weeks of movement here. So I'm going to keep this here, and we're going to move this out to this week, and we're going to call this an inversion fair value gap, right? Same with this one here. So this is a balanced price range. So now we can call that an inversion fair value gap as well, low. If these are truly inversion fair value gaps, we won't see them traded to very much. We'll see them very much traded to on a and then rejected, immediately rebalanced if they are true. So one thing I need to mark as well, we've created a new weekly fair value gap from here, a buy side imbalance, sell side inefficiency. So we need to mark that as well. And this low is at 15,465.25. So we can mark that as a weekly premium BISI high, untouched. And we can mark the low here as well. And this would be at the high here, 15,228.50. So 15,228.50 is the other weekly level now that we have here. We'll make BISI low, untouched. So that's a weekly level. If we hit a monthly level, like if we go take out that premium 3-month rejection block and then we reject from there, I would look up for us to start heading down towards this weekly premium buy side imbalance. So, and you can see additionally here, there's a previous short-term high that turned into a weekly BISI high here, which was untouched. We never got back down into this area. So there's a discount BISI low here, untouched. Discount BISI consequent encroachment as well. We have that marked out. And of course, this is the old one that we just marked and moved to this week. Inversion fair value gap, right? I think I want to change this label. BISIBI, I'll say inversion fair value gap low. Keep it simple here. So this range here, from this weekly low to this weekly high, that's a sell side imbalance. Price is now closed above there. So if price were to come all the way back down here, right? I could kind of treat that as near the midway point of this buy side imbalance, sell side inefficiency. I could see price trading down here. And if it respects the midpoint, we could see it continue rally. Otherwise, we need to see how price reacts there. So down here, we don't have to, worry ourselves with that. I'm going to remove some of these other Fibonacci's as well. So we don't have to worry about those yet because it's going to take a little while to get all the way down there. But we do have that movement here, that yellow line to this yellow, or to this yellow line here. So from here to here, there's that weekly buy side imbalance, sell side inefficiency. I would have those marked as well on your charts. Cool. I think I can take some of these other ones out, but let's go to the daily now that we've got a sense of what's below us. We got a sense of what's above us on the weekly, and then we know what's super far above us on the weekly over here. And let's actually mark that so that we can kind of go over here and have it end this week. Yep. Same with this one. Let's end it at 5 o'clock p.m. Oops. 5 o'clock p.m. Cool. We got it. So we have this weekly level that's above the monthly premium rejection block. So I'm thinking that if we do go up to this 3-month, we can come all the way up here, and then we start to see us fall. And if we fall below here, that's going to be our monthly bearish order block. Monthly bearish breaker there. So we'll see if price gets all the way up there, but that's what I would expect. If we see continuation of this rally, that's about where I would think, okay, it's time for me to close some of my longs, or it's time for me to close out some of my equity. We've seen a meteoric rise. We're going to see the seasonality occur in November and December, I think, and we'll probably rise all the way up here is what I'm thinking. But considering macro conditions, I mean, it's so hard for me to think that we'll take an all-time high. I think that getting close to here will get people excited, and then I think there'll be liquidity that comes in and drops us to make a bearish breaker to head further down back towards this area of liquidity in the coming year. So let's look at the daily now. So on the daily, you can see we're still in this range here. We're just on the daily level. So these purple lines that you see here, these are my daily levels. And something that I want to note here is that this one keeps. Let's move this out to the 24th so we can see this. This particular daily imbalance here. You see this here, right? So we see this daily sell side imbalance, this daily premium sell side imbalance, high and low. You can kind of see how we've been trading within this area, right? So we traded up, traded up into the bearish order block up here, came instantly down, saved it, started to consolidate. So what's in it for us today? So yeah, so today we've already gone down quite a bit from open. Just a few, 20, I think a couple dozen points. So right now we're in a consolidation area where, hey, we've reached a daily level. There are some daily volume imbalances above us, but we instantly rejected when we saw those. So is it higher likelihood that we will continue trading upwards? Well, no, not yet. But perhaps on a lower time frame, we see this mitigation block here. Remember I pointed that one out last week? I think we could see prices come down to here, fair value gap here, mitigation block here, and then I could see us take that as a rally point because it would have gone past the 50% point of this lower fair value gap here. Could we go all the way down into this bearish or this bullish order block? Yeah, absolutely, but unlikely considering that there's a bullish breaker right here. So a low, high, lower, low, displacement upwards. I do think that we'll end up coming back down here before we continue upwards. So that's what I'm thinking, and I'm looking for evidence of this. We can certainly go up to take out like a low, high, lower, low, higher, high first, and maybe even higher high on the 3 months. So it's going to look super bullish. But once it hits this level, I'm going to be wary. I'm going to be looking at these 2 weekly levels to look for shorts, and hopefully that aligns with the December timeframe. Like we see continued rally, past through the Christmas, Santa Claus rally, and then come New Year, I hope we see us deteriorate a bit. So that is the most interesting thing that is occurring right here on the daily chart. Oops, let me go to full screen once more. There are no other people who are looking to take this out yet. There's, you know, the daily low are being protected, the daily highs are being protected. It's sitting within this consolidation zone. Yellow, brown, green, hello. Phoenix AVS, good to see you, brother. How have you been? I hope you've been doing well, buddy. Tell me how your weekend went, brother. I want to know. Cool. So yeah, I mean, this daily level, this premium daily level that we're in right now, I think we're going to continue to stay in that for a little bit. So let's see what price does. So far, we've come down first. I think we're going to get into consolidation a bit until we see something major. This is also a holiday week as well. So, I mean, unless unemployment claims moves us significantly, I mean, there's nothing else this week. Excellent. Just got in. Awesome. Awesome. Super weekend. How about yours? But yeah, my weekend was great. I got some bubble tea. I got to play some tennis. And yeah, I mean, it was good to be outside. It's super warm here in Ohio, USA. And you know, it feels good to be outside in the sun, honestly. I mean, with trading, we're oftentimes in these little caves of trading. So it's good to get outside, get some good sun, get some good mental restoration there. And yeah, just drinking some water, you know? Love water. Love staying hydrated. Okay, so in reality, though, let's take a closer look at this daily range we're in, right? So, you know, barring the excuse here, one thing I want to point out is on the daily, there's this wick here, and we want to note this 50% mark here. This 50% of this wick, okay? It's about 15,972.25. Why do we care about this wick? Well, for one, this is going to help us know if this will help us know if, hey, like if we head up here, then there's a chance that if we see it respect that wick, actually that's a daily wick, so we should probably make that a daily color. And mark that as a 1 day, oh gosh, what is this? 11:15 upwick CE. So we're going to mark that as a upwick consequent encroachment 15,972.25. Michael Tapiero, hello, brother. Hope you're doing well. Phoenix AVS did some work on the monthly chart and did get some of those high levels. Yeah, good. I'm so happy to see that, brother. Monthly charting is where everyone should start. Listen to that closely. I mean, monthly charting is where everyone should start. It seems super goofy because there's not a lot on that chart, but when you do see your fair value gap there, when you do see your rejection block, your short-term highs, short-term lows, bullish order blocks, bearish order blocks, you know, all of those key tools, if you can identify those on the monthly with clarity, that's your edge. You know where price is going to on the higher time frame, and you can take trades in that direction with more confidence. So Michael Tapiero, premium consequent encroachment wick. Actually, that's a good point. Let's mark that as a premium. It's a very high premium. Now if we see price close above that, though, remember, we still have a 3-month, a quarterly rejection block up here. We have a monthly premium SIBI high. We've traded to it, but we haven't closed it out completely, right? And of course, this 3-month short-term high on the buy side we haven't touched. And then God forbid we head up to this other 3-month rejection block up here with the weekly SIBI that we haven't touched yet either. So thinking about November and December, right? If we see how big of a run we've made down here, there's a lot of liquidity down here. We haven't touched any of it though. So we can't think, okay, it's instantly going to go short right here. Honestly, this is going to start to form a bullish order block, or sorry, a retail, what do you call this, a bull flag. So I'm thinking that we retrace a bit, potentially into this fair value gap, potentially down to this weekly BISI high and its inversion fair value gap high. I'm thinking we potentially trade down here first, take this out, don't form a lower low, and then we continue upwards to take that out in the seasonality of December or so. I think that once we get past December, you know, it'll depend on how the new year begins, but we'll have to see how January, up until January, you know, 15th, 13th, around that time frame. I think it'll take some time to get all the way up here, but I do think that we're headed up that way. But I'm not bullish though. I am temporarily bullish, because of what we see here, right? So if you studied ICT, there's a concept called a bullish breaker or bearish breaker. It is a for a bullish breaker, you want to see confluence of certain things. 3 drives pattern, 1, 2, 3. Low, short-term high, short-term lower low, into a premium, or into a discount, which is, remember that dotted line I showed you? That's a 1 month, well, this says premium buy-side imbalance, but it probably is on the monthly, but here we still have this being the bodies. Remember on the 3 month, I marked out that this was using the bodies only. This was the 50% equilibrium line. We didn't get down there yet, right? So price is not allowed, in my opinion, it's not allowed to continue rising until we get down to fair value. Now, one thing to consider though, is that because we stopped just short of that, I think that that's what allows us in the future to take this area of liquidity out here on the 3 month chart and then head back down to take this out. You know, there's a lot of stuff down here that's left open. So again, lots of stuff in the higher time frame. It can take months to get down there. So don't think that by any means you want to try to take this short and try to time the market here, because you will get spanked if you try and pick the tops in a bullish market structure shift here. So we've not only taken out this high, but also this high here. So 1, 2, 3 premium arrays on the daily that have been taking out, and it's covering in this area right this moment. So again, I think that we head back down to this. Remember I marked out this mitigation block here, this blue line here, right here, this previous high. If I could freaking get this to work. 15469.5. Solo Ayush. Nice emojis there. That's pretty cool. You'll have to teach me how to do those sometime. I haven't, I'm pretty good, but I'm not that technologically savvy to go Google some of those. So yeah, I think we can head down to here. I don't know if we're going to do it this week because we need to see how unemployment comes out to play. Remember, in the economic calendar, we've got unemployment claims on Wednesday, FOMC minutes on 2 o'clock tomorrow, and existing home sales on Tuesday. So if we're, I think if you're not done trading by, say, 10 o'clock, 11 o'clock maximum on Wednesday, you shouldn't trade the afternoon before a holiday, in my opinion. It's going to be really crazy. Very low volume, I think. So, I mean, this week, we've got some targets. We have some targets to look for. We need to get out of this daily SIBI high and low. So these purple lines here, remember we drove up to here, we spiked up, took that out. We need to see, okay, well, do we head down first to take out this short-term low, and head down to eventually this mitigation block here. Let's move this out to this week as well. And I will mark this as a black line actually, so that we know it's a old mitigation block. We can leave that there. Kind of make this a black as well, just so we know it's tied together. So now we know this is a previous mitigation block. And actually, we'll see if we head down to that one, or if we head down to this one as well. Right here, right? So we can mark this now as black line. And we can also mark this as a black template as well. And I can mark this all the way out till this week. Okay. So we have two possible mitigation blocks here. And this we are already moved out. Okay, good. So we have these two mitigation blocks here to worry about. This is a large drop, 87654, right? That's a huge drop here. But I'm not saying it can't happen, but I mean, this week for it to drop this many points, I would be very surprised if it did that. Very, very surprised. So it could come down to this portion. And what does that also put us at, right? Here's this daily. Let's see if we can get a easy view. So here's the 50% of this buy side imbalance on the daily. Look at that closely, right? What do you see there? So we see this mitigation block here, which is right below the equilibrium point of this fair value gap to the upside. If you encounter a mitigation block, okay? If you encounter a mitigation block, I am instantly seeking to see how price responds up from there. In a bullish market structure shift, I'm not going to short this until we see a true lower low. Now, if it gets down there, it certainly could count as a lower low there. And then if you have to be careful there, because now you have the case to be made for it to come down with a fair value gap, come back up, and then short even further down to continue downwards. You have a high, low. I mean, you don't have a higher high. It's a failed run here, and you want to take it as it goes back up to the short-term low. You'd want to take it short back down to this key level down here, that other daily short-term high that we have there. We can consider this to be a mitigation block as well. And we can state that as such. So that is a long ways down though. So this is where my eyes go to immediately. So I'm going to remove the 50% fib on that buy side imbalance. And those are our high level levels so far. So this week, let's see where price takes us. Let's go down to like a lower time frame chart because I'm out of time. And let's take a look at how our day started. So we started the week here. We went up, we went down pretty dominantly first, but we did go up above that first. So we'll see if price continues and is respected at the bottom of this daily. These daily SIBI high and low. We'll see how price rejects from here, or if it plummets through there to catch this short-term low here. Let's put this 5 o'clock p.m. on tomorrow. So we have this run out till 5 o'clock p.m. tomorrow. So we'll be watching this short-term low here. And we'll see how Asia and London pan out. Because as you can see, there's certainly still some very much so to be made cases to head to the downside. So we're going to keep those there just in case so that we know what's going on, right? So I think that's it. This did not get respected, so we can remove that. Relative equal lows. We can also remove this because it's already traded to. This doesn't really matter here. This too doesn't really matter. We did see displacement, and that's a 2022 model. Price went back up. Continued downwards, spiked up to take out any shorts here that have trailed too closely, and then finishes the move down. Okay, so this is on a 5-minute chart. We see how we took buy side liquidity from earlier. So right when we took buy side liquidity, that was a short for the rest of the day, right? On Friday. And it was wicky. It was very wicky. If you went short anywhere in here, you would have gotten stopped out there. If you missed this and FOMO'd in, even if you took this short here, you would have had price rocket up and take you out too. So I know a lot of people probably got wrecked on Friday. I saw a whole bunch of people in a certain Discord get wrecked, but Friday was good for us though. I mean, it was very calm, disciplined. If you haven't gone back and looked at those charts though, and looked to see what happened on Friday, Friday was an excellent masterclass in terms of like what areas liquidity got taken and then taken action upon on a Friday. So definitely go back and watch that. I think I ended up replenishing a couple of evaluations that will serve as performance accounts for the 2 that I blew earlier. So yeah, I mean, I think that's really it. You know my daily bias now. You know what we're looking for. You know what we're looking for on the daily. You know that what we need to see is a break out of this range that it's in right now to give us an idea of, hey, is it running for stops here and then heading lower, or are we heading lower to take out some of the previous, mitigation block stuff here and then heading even higher, right? So we need to determine that. That's really it though for this week's prep. You need to see price move in or out of one of these and to see, hey, if we move down, are we moving down with so much force that it creates its own fair value gap? Well, if the answer is yes, then perhaps things have shifted. Perhaps, not guaranteed. So got to keep nimble. And yeah, I mean, that's really all I can predict for the time being. Let's see how Asia and London pan out to see what might form. But until that point, be very careful. It is very prone to consolidation. And as you can see on these daily charts, you can get faked out both ways pretty easily. So just continue doing your thing and be patient. Be patient. So that's it for tonight's market review. Any questions from the crowd? Michael, Phoenix, Solo, Ayush. Any questions from the crowd? Move this over here. All right. Well, if something does show up, I mean, let me know. I'm always happy to explain it a different way. But Phoenix AVS, thank you. Michael Tapiero, see you, man. Thank you. No, thank you. Appreciate you all. I continue to see this channel grow, and it's all because of you, All good. When are you trading? You know what, Phoenix? I'm actually taking Wednesday off, so for sure I'll be trading on Wednesday live. Monday and Tuesday I still have to work, and then Tuesday I have to physically go into work. So, um, so I think that I'll see. I'll see. Maybe Monday I'll probably start. I'll try to get up. Because Monday is let's see. Monday's got nothing. Tuesday's got 10 a.m. news and 2 o'clock p.m. news. So those will be good. Tuesday will be a good day to trade, but I'm gonna be physically in the office, so I'm gonna miss out on that day probably. But Wednesday for sure, I'll trade in the morning. Monday, I really don't love trading Mondays, but I like to study price action on Monday, so we'll see if I can find a trade on Monday or not, right? So just depends. I'll try to get up around, oh, I don't know, maybe I don't know. Monday's a tough one because I don't know what's happened yet. I don't have enough information about where the week's going or what's going to happen that week yet. So I don't know. I might just eat breakfast Monday and then hop on a little bit later, like 8 before 8:30, probably 8:30 a.m. Eastern. I think that Wednesday is a great day after the fireworks from Nvidia, 500 plus. Yeah, Nvidia is insane right now. Um, they're holding up the market for sure, and people love it. People are. I think with crypto, with some of the spot ETFs that are coming up on Bitcoin and Ethereum, I think it's fascinating. I don't trade crypto. I know it's 24/7, and that would allow me to trade on the weekends maybe, but yeah, right now I don't have it. I have like maybe half of Ethereum or something like that, but I don't have much crypto, so I don't really trade it. So futures is enough. Futures is more than enough. So yeah, cool. All right. That's it. Hope everyone gets some sleep. Go ahead and get some sleep if you're in East Coast. If you're outside the states, go ahead and uh, hope you have a good day, good morning, good afternoon, and we will catch up soon, okay? Have a great, great, great rest of the day, and we'll see you bright and early tomorrow morning. And good trading this week. We'll continue to build the accounts little by little, brick by brick, and keep inching towards our goal. Um, cool. All right. Take care, everyone. Get some rest. Drink some water. Stay hydrated. Yes. That's all she wrote. Good night, traders. Good night. Good night. Take care.